Welcome to all of you in the new session. In the last session, we have discussed about definition of company, features or characteristics of company, lifting up or piercing corporate veil, nature of business organization in India, promoter of a company, classification of company. In this session, first we are going through brief discussion of the topics. First, definition of company. It comes in the section 2, subsection 20. In terms of Companies Act 2013, company means a company incorporated under the Companies Act 2013 or under the previous company law. Characteristics of company. Characteristics of company is as follows. Artificial person. Company has its own identity. Common seal. Company have its own common seal. If any company have no common seal, two directors can sign the documents. In the absence of directors, one director and one company secretary can sign the documents. Perpetual succession means continuousness, capacity to sue or to be sued in its own name. Nationality, of which country company has its registered office. Limited liability of members, limited by shares, limited by guarantee, and unlimited liability. Separate legal entity. A company is separate from its owner. Lifting up or piercing corporate veil. Lifting up or piercing corporate veil means removing corporate guards. If member or director have made fraud, then penalty will be imposed on them but not company. Nature of business organization in India, public company and joint sector. Public sector may be government, department, railway, ordnance factory, statutory corporation, RBI established in 1934. Company with major holding by central government or a state government having its independent management by board of the director means government company under section 2 subsection 45, and another is joint sector government investment between 26% to 50%. Promoter of company. Promoter is a person who is engaged in incorporation of a company and makes agreement for all pre-incorporation requirements and obtain a certificate of incorporation on behalf of company from ROC. Type of company on the basis of incorporation, it is two type: statutory company and registered company. On the basis of liability, liability limited by shares 2 subsection 22, limited by guarantee 2 subsection 21, unlimited company 2 subsection 92. On the basis of membership, private company 2 subsection 68, minimum member and minimum director should be 2. Public company section 2 subsection 71, minimum members should be 7, minimum directors should be 3. One person company section 2 subsection 62, on the basis of control there are two types of company, holding company and subsidiary company. On the basis of listed in recognized stock exchange, it means listed of its equity share. But if company listed its other security like non convertible debenture, redeemable preference share in a stock exchange, then it should not called listed in recognized stock exchange, unlisted company or closely held company. Other type of company, NPO section 8, non-profit organization. Non-profit organization established for not to earn profit. Their main aim to promote commerce, science, arts, education. NPO obtained a certificate from central government. Central government can withdraw its certificate. NPO cannot give dividend to its shareholder or members. Another is foreign company. Section 2, subsection 42. Incorporate outside India, conduct business activity in India through electronic mode, business to business. It may be business to consumer. Accept deposit or invest deposit. Through online, it can do the services such as telemarketing, telecommunicating, education and information research. Through financial settlement, it can do financial settlement. It should register any branch office in India within 30 days of activation of its business in India. It should register two ROC. One is in Delhi and another is in its state of activity. MOA and AOA should submit to the ROC. Small company whose paid up capital should not exceed 4 crores and turnover 40 crores. Nidhi company. Nidhi company is one type of NBFC. It borrow and lend money to its member. The member should not less than 200. Net owned fund of 20 lakh rupee or more. An unencumbered term loan of not less than 10% of the outstanding deposit. Ratio of net owned fund to deposit of not less than 1 is to 20. Another types of companies are government companies, associate companies. Associate company means the company whose 20% or more significant to its another another company. Dormant company, where a company is formed and registered under this act for a future project. Joint venture company. Joint venture company means the company where two or more parties comes with an joint agreement. That was the session of second slot. Thank you for watching the session. Please like and comment below.